Hello from Trend Signal for a review of the data and events the week beginning the 11th of December. Markets on Monday morning, reasonably steady to higher. Certainly equity markets are buoyed by some fairly positive data from China. That's positive trade data. Better than expected non-farm payroll Friday also helped push the S&P to a record close Friday night. So it seems that optimism abounds ahead of the Fed's rate setting committee meeting this Wednesday, when I think it's fairly certain that rates are going to be increased by 0.25%. The fall in the euro was probably the main driver for the Eurozone markets last week, with the DAX tacking on a hefty 2.4% gain. Certainly on Monday morning, all the markets were in positive territory from the off. Sterling, well, that suffered, or sterling markets, I should say, suffered several bouts of nerves last week. Ultimately, the UK and EU achieved a divorce agreement that opens up the way to start the trade and trade discussions and the security arrangements. Sterling did rebound Friday, but after the announcement was made, I think traders were pretty much net long. So I think we witnessed about a profit taking. Certainly the hard task now starts, and probably within a very tight time frame as well, so anywhere between 9 months to a year, to agree this trade deal and agree security arrangements with the EU. And of course, we've got the Monetary Policy Committee meeting this week to add to that volatility. So let's have a look at the data events this week. It is a big week for data, a clutch of central banks. Certainly their rate setting committee is meeting this week. Not just the Federal Reserve, we've also got, I just mentioned the MPC, we've got the ECB from the European Central Bank, and also the Swiss National Bank also joining in this week. So let's have a look at the data. Nothing on Monday. In fact, nothing on Monday or Friday, so all the events and releases this week are shoehorned into Tuesday, Wednesday and Thursday. We start off with inflation here in the UK. That's the CPI data, expected at plus 3% as it was the previous month. And there are signs that inflation could start to be topping out. So we'll be looking forward to seeing what Mark Carney and the MPC make of it this Thursday. Tuesday, we also have the Producer Price Index from the United States. This is like a leading indicator for inflation. That's the cost of goods and services going into production, expected a reading of plus 0.4%. We then jump to Wednesday, and I'm going to focus on the US inflation reading there, CPI. It's the core one that we're interested in, that excludes those more volatile food and energy components, expected at plus 0.2%. Pretty benign, really. Nothing changes there. That's the quandary that the Federal Reserve is having to deal with, and with Trump's tax rises, cuts in taxes, I should say, corporation tax and individual tax cuts that will be passed by year end. It makes the Fed's task quite complicated. Anyway, other data, regular weekly crude oil inventories, more and more drawdowns as the OPEC's production cuts continue to bite, although the price not actually reacting that particularly positively last week. Crude oil shading about $0.50 on the week across the board. Okay, let's jump to the main event of the week, really, which is this much talked about Federal Open Market Committee meeting and the almost certain rise in US interest rates by 0.25%. The CME's forward rate FedWatch tool tells us that there's a 90.2% chance of a rate rise, which is as certain as it probably can be. It's unlikely ever to be 100%, of course, but that is pretty certain that there's going to be a rate rise. The non-farm payroll last Friday was pretty healthy at 228,000. All the data that we've been looking at recently has all been quite positive. I think what the market is really interested in is what the prospects are for rate rises next year, and that's the thing that will actually affect the value of the dollar and ultimately will impact equities and bonds, and to a lesser extent commodities. So really, it's what effect the Trump tax cut will have. $1.5 trillion in total, a little less than expected from the initial discussions, but that was negotiations for you. But that will pose a dilemma for the Fed as it plans the likely path of interest rates next year. And obviously with an cut in taxes, this will lead to an increase in economic activity, or so that's the theory, as obviously companies will have more money in their coffers, and to a lesser extent, so will consumers. So more money in the hands of consumers, will it lead to greater consumer spending, etc. So the Fed have got a plan, and it's their projections for interest rates will be interesting to see. Already we've seen a slight hardening in expectations next year, so anywhere from between 2 and 3 interest rate rises, and it'll depend on what they say on Wednesday evening as to how those projections will progress. Let's get back to the rest of the data this week. So we've dealt with the FOMC, and then we jump to Thursday. Chinese industrial production, we had some very positive data, surprisingly positive data out of China over the weekend, so that may well attract a bit of interest. We've got the Swiss National Bank, their monthly policy meeting, no change expected on anything from the Swiss National Bank. Retail sales here in the UK Thursday morning, plus 0.4%. Steady as she goes, but really the key event for Thursday, certainly for the UK markets, it will obviously be the Monetary Policy Committee meeting, their monthly policy meeting. We expect no change, possible divergence maybe on the votes cast, and also be very interesting to see what they've got to say about the path of inflation over the next 6 months, as there are signs that it could be starting to wane a little bit, which will be good news for the slightly beleaguered Bank of England as it tackles the effects of the sterling collapse after the Brexit vote. Okay, and then we've got the European Central Bank. The European Central Bank monthly policy meeting. Not really talked about that much, actually. We're not expecting any change from the ECB. The improving economic data, an improving economic picture, really, which is positive, but I don't think it's going to yield to anything. It's possible that there may be comments about the QE program going forward for next year, but yeah, we don't expect any change other than that. And then later on in the afternoon on Thursday, we have core retail sales from the United States. Important number, plus 0.7% after a slightly lackluster reading last month. And that's pretty much it for the week. So a busy week, really. Central banks dominate. Probably the standout one will obviously be the FOMC, but for sterling markets, the MPC and our inflation reading on Tuesday morning will be those key events that could drive those markets. Thanks very much for listening. All the best. Bye now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.